Hello, I'm Richard Murphy, and I'm talking about what tax justice should be thinking about in 2021. This is one of a series of videos on that theme. And the issue I want to talk about in this video is understanding how tax fits into the government funding cycle. One of the big problems that I now have with tax justice is that many who are campaigning for what they call tax justice use a very simple analysis of the relationship between tax and society. What they say is that if we don't have tax, we cannot have health services. If we don't have tax, we can't have education, and so on. Now, as a simple matter of fact, this is not true. We know that throughout the world, there are a number of mechanisms for funding any government. They differ slightly, and I'm going to mention the differences. But if we take a developed country, then the choices are that government funded activity, and there are a whole range, of course, of government funded activities, can be financed by taxation, by borrowing, by the government running an overdraft with its central bank, and by quantitative easing. So there are four mechanisms to actually fund government spending. Now, the government spending must be balanced because books do inevitably balance, and this is a financial transaction, and therefore at some point government spending will have to be matched by one of those things. But the reality is that to pretend that tax pays for all government spending is not true. In fact, in a country, for example, like the UK, where I suspect most people who watch this video will be, to fund government spending, all that a government has to do is decide to pass an Act of Parliament to authorise a spend. And then, using that authority from Parliament, the government can tell the Bank of England to spend on the authorised programme. The Bank of England has absolutely no right to object. In a law passed in 1866 and still very much alive today, the Bank of England simply has to allow the government to spend whether it has money in its bank account with it or not. And at the end of a week, and I literally mean at the end of a week because the government does try to balance its books over a week, the government then has to make a choice as to how it will now try to literally create the balance in its financing systems that it desires. Now, many UK governments to date have tried to pretend that government spending is matched by taxation and borrowing. So it will look at its tax revenues and traditionally, if it was a shortfall, it would borrow. If there was an excess, it could actually repay borrowing, but that doesn't happen very often. Alternatively, we now know, since 2009, that the government has the option of using quantitative easing. Quantitative easing is government money creation through the Bank of England. It is literally, in effect, the grant of an overdraft from the Bank of England to the government, but done through a rather complex mechanism of repurchasing government bonds previously issued, sometimes no more than 7 days beforehand. So it can be a very short-term funding mechanism, but it makes it look as though the government isn't directly borrowing from the bank. And finally, the government can, in fact, simply run an overdraft. It's called the Ways and Means account. It was commonly used before 2009, and the facility still exists. There's a £20 billion marked up loan facility on the Ways and Means account at present, and it could make it any sum it likes if it wanted. So in other words, the government has a decision to make. Now, the reason why it makes that decision is based upon its decision about how it wants to influence the macro economy for which it's responsible. And let's be clear, tax is a player in macroeconomic management, which tax justice has tended to ignore. It's tended to think about tax as a very microeconomic issue, the microeconomic issue of how do individual taxes work, how do individuals pay them, and how does the government balance its books with regard to tax equating to government spending. But actually, that is not how tax works. Tax does not equate to government spending, and the degree to which the government wishes to subsidise the economy, in effect, by new money creation, by leaving money out in the economy untaxed, has a massive impact upon the overall levels of growth and economic activity that are undertaken in an economy. Now, I'm not saying that growth is necessarily good. I'm well aware that there are many in the Green movement who would not agree that it is. But the scale of economic activity that is undertaken is of use, and it does not need to be destructive per se. So this issue of how the government decides to stimulate or, of course, calm down the economy by the relative difference between the amount of government spending and the amount of tax that is collected, and how that difference is equated through borrowing, quantitative easing, or simple overdraft, is a macroeconomic function that is fundamental. And I now think, and I'm really urging the tax justice movement as a whole to understand this. I'm also urging them to understand this in the context of developed and developing countries. What I've just described is about developed countries. Developing countries are in a different scenario. Very often, they don't always use their own currency for all their domestic transactions. Very often, they're forced to borrow in a currency other than their own. Quite clearly, that puts them in a very difficult economic position. And it's not always possible for them to therefore easily create their own funding without creating inflation. But there is another factor in the equation in the case of many developing countries, and that, of course, is aid. And aid does come from developed countries or via agencies like the World Bank and IMF. And these agencies and the developed countries provide a function which is not the same as the issue of money inside a developed country, but which performs in a similar sort of fashion, and which needs to be considered in the same overall economic dimension. Again, therefore, tax is not the only funder of government, is the point I'm making. Tax justice needs to understand now that tax justice requires macroeconomic justice as well as microeconomic justice, and that putting tax into its overall context and understanding how it plays a role in delivering a fair economy for all through managing this big scene as well as the micro scene of the individual taxes is as important, and that's an issue for it to address in 2021. Thanks for watching. If you're interested in what I've been saying in this video, please subscribe. There is a button below the viewing screen. If you're interested in what I have to say on Twitter, I'm at Richard J. Murphy on that medium. If you want to look at my blog, that's taxresearch.org.uk, and we have a Facebook page as well, Richard J. Murphy. So one of those things will get you more information on what this video series is about, and I hope I'll see you again soon.